Patriot Nation, I'm laying it on the line today. There is no debate between the concepts of renting versus owning. I'll get right straight to the bottom line. If you can possibly own immediately, you need to own immediately. You do not wait for the perfect interest rate environment. You do not wait for housing prices to come down. You do not wait for more closing cost coverage. All these things are maybe good to think about in the short run, but I'm telling you right now, in the long run, all they do is keep you from building significant wealth over time. I'm going to prove all that in this video, and I really want you to pay attention. I'm going to pass this video along to friends and family because it's a good topic, and let's kick off this rodeo right now. Folks, I'm Kevin Fagan. I'm the Mortgage Patriot on your side, nestled here in the hill country above San Antonio, Texas, serving all you proud Texans and all you great folks all around the country. So as always, a very important topic, and I'm very passionate about this one because I just see people putting off the concept of home ownership because they're waiting for rates to come down. They want housing prices to come down. They need more cash to close. They need something. But all I can tell you is after 30 years of watching this in my personal life, in my friends and family's life, if you don't own a home at some point, you are so far behind the curve that you may not be able to make up for that lost time come the senior years where you're going to need some nest egg. So as always, if you hit the like and subscribe below, that really helps me with my content and brings my videos to the forefront. I've got a lot of great videos, as you can see here. I talk about lowest ways to get your cash to close down when you want to buy a home. I've got concepts on renovation loans, pretty much everything across the board. So spend a lot of time in my video library. You're going to learn a lot. But let's talk about now owning versus renting, because there's really no comparison when you really get down to it. Let me start off with some empirical data regarding wealth, since I mentioned wealth building when you own. Okay, so here's a chart, 1989, and it goes all the way to 2022. So obviously it's 2 or 3 years old, but the trend line is going to be the same. In fact, it's going to be even bigger. So it starts off in 1989, the difference between the wealth, the family wealth or individual wealth of a renter versus a homeowner. And in 1989, that wealth was approximately $200,000 for a renter versus about a little over $500,000 on a homeowner. So there's about a $300,000 wealth gap. In other words, a homeowner with about $300,000 on average had more wealth than a renter. As we go along the graph all the way to 2022, look how that spread has gotten bigger. So now the wealth gap between somebody who rents and owns is over $1 million. Notice that the renter's wealth hasn't climbed that much. It's gone from about 200 to about 400,000. And on the ownership side, though, we've gone from about 500 to looks like about $1.4 million. So that gap now is $1 million gap, the wealth difference between just owning and renting. This is just empirical data from the Consumer Finance. But that's going to be the case. The longer you hold a property, the more and the bigger your wealth is going to be. So let's go into some quick overview of some benefits maybe of renting, but then otherwise I'm going to show you real life numbers of what you can expect in terms of wealth building and ownership benefits by buying a home. Okay, let's get into the few benefits that a renter has in the short term over home ownership. And I'm not pulling any punches here. I get it that obviously if you're needing to be moving in 6 months, then you don't want to be buying a home and then moving in 6 months later. I get that, obviously. If you're going to be moving in a year, should you be buying a home now? The answer is probably not as well. But somewhere between 1 and 2 years, it's going to make sense to buy a home. Certainly after 2 years, there's no question that you want to, in other words, if you're going to be moving in 2 years, you know that for a fact. The question is, do you buy or do you sell? The answer is going to be, you're going to want to own. Man, at a year and a half, that's probably going to be your choice. But I think ownership is going to be better. Anything inside of a year, yeah, you're probably going to want to rent. So those two big advantages are flexibility. In renting, obviously your terms of your lease can vary. 3 months, 6 months, 12 months, you don't have that flexibility, obviously, when you're buying a home. You buy a home, that's pretty much it, right? And then the other big one, of course, is lack of maintenance. If something breaks, you're typically not having to fix that as a renter. As a homeowner, of course, you're subject to those repairs. But as a way of mitigating those repair work, when you first buy a home, you want to be with a good agent like myself or somebody that I can point you in front of. You're going to be wanting to do what they call a home warranty. A lot of times the seller will pay for this. It costs about $500 to $600 for the first year of a warranty, where if something breaks down, usually the internal systems like appliances, AC, water, and electrical, your big systems, if any of those break down, you're covered. So, I mean, you do have a small deductible, maybe $100. But again, it's not perfectly true, in other words, to say that as a homeowner, you're going to be paying for all your repairs. That's not true if you're covered with insurance, just like any other insurance coverage. Okay, folks, let's get right into the meat of this. Why would you want to own after even a year's time versus renting? And the answer is going to be appreciation of your home value. Homes that appreciate over time no matter what. And even if they didn't, even if they stayed the same, you bought a $300,000 house and it stayed the same for 30 years, you're still paying that note down, assuming you financed it, down to zero. So you have $300,000 at the end of a 30-year period. Whereas renting, of course, all your rents do is what? All they've done is go up over time. And that's all they will do over time because of inflation and other factors. So you've got to be able to own as quick as possible. Now, let's take an example. We're going to run this example all the way through the rest of the video. We're going to talk about two individuals, and they both make the same amount of money, $72,000 a year or $6,000 a month. They can buy, at least in San Antonio, Texas today, a $275,000 home. You can see a picture of one right here. That home sells for $275,000 today in San Antonio, Texas. The payment on that, if you put down 3.5% with an FHA loan, okay, at a 6% rate, which was about where we are now, given property taxes, levels, and so forth in the area, is $2,365. The rent on that property is about $2,150. So individual A is the renter, and he rents for $2,150. Remember that. Individual B is the owner, and he buys this house for $275,000, and he pays $2,365 a month. So let's run this example all the way through, showing all the growth and the benefits and so forth. Okay, so let's stay with this example, dig a little deeper as we go from a 1 to a 3-year horizon. You can either rent this property for $2,150, or you can buy it at $275,000, paying $2,365. That's where we are right now. So let's make one more additional assumption. The appreciation on this house and the appreciation of your rent are both going to go up by 4% per year. And that's about standard. In other words, if you sign a rent, you can expect rental hikes of about 4% per year just till the end of time, right? And historically, home prices have been going up about 4%. Lately, been going up much more than that, but let's stay to 4%. So here we are. After year one, your $2,150 rent is now turned into what? Well, it's turned into $2,236. Not so good. But you wanted to wait a year to buy that same home. Well, if that price of that $275,000 home appreciates 4%, you can't buy for $275,000 the next year. You have to buy for $286,000. It's gone up $11,000. In your mindset of saying, well, I'm just going to wait a year and see what happens. Maybe houses prices go down. Well, what if they don't? In our example, they've gone up $11,000, and now you're stuck paying rent of about $86 more than you were prior. Not so good. So let's keep going along this little ride here. After the first year, you decide to rent again. So at the end of that second year, with 4% appreciation now, your rent, which started out at $2,150, is now $2,325. $2,325. That's almost as much as your mortgage payment would have been. And the person that bought that house, which has appreciated another 4%, is now worth from $275 to $286, now to $297,000. So if you wanted to buy that same home after 2 years of indecision, it's going to cost you not $275, but $297,000. And again, if you don't, your rent now is as much as the mortgage payment was to begin with, virtually. So you're losing out if you don't jump on this bandwagon right away. And you might be saying, hey, Kevin, well, I don't have the money to buy a home right now. And that's the big advantage maybe of renting. Well, not so much. Let's just talk about that. Most situations require, you got to pay rent up front and you got to pay a first month's deposit. So you're paying 2 rental payments up front, right? And in our example, $2,150 times 2, that's $4,300. But if you bought the $275,000 home with the aid of and the advantages of seller concessions and down payment assistance, of which I have lots of videos. Okay, here's one right here. How to buy a $300,000 home for $1,000 total. Okay, that's one of my most popular videos. I break it all down using down payment assistance and seller concessions. But getting back to our example, buying a $275,000 house, on average, I can get the cash to close down to $8,000 or lower using seller concessions and down payment assistance. So renting, you're coming out of pocket for $4,300, as in 2 months rent, or buying this $275,000 house, you're coming out of pocket for $8,000 or a little bit less. So that difference is not a whole lot, friends. You've got to own as soon as you can, because the numbers will always work in your favor, always. Let me show you one more quick set of numbers. Let's look at the 30-year horizon. This assumes the worst case, obviously, scenario, but I've seen this happen, that people keep waiting. I'm waiting for the market to come down. I'm waiting for the market to come down. I'm waiting for interest rates to come down. They do not own. So they go 5 years, 10 years, 15. Next thing I know, they're in their 50s. They still have not owned a home. And they've gone 30 years now, and they're renting. I can tell you, I'm old enough to know that I used to pay $300 for rent way back in the late 70s. And here we are, we know where they are now, right? So if we take that $2,150 in our example as a renter, and we go out for 30 years at 4% per year, how much rent are they paying in year 30? Would you believe they're paying $6,705 per month? That's with the 4% increase appreciation and rental amounts. And that's going to happen. And of course, how much equity have you built along the way? Zero. The answer is obviously a fat zero. You have zero wealth. All you're doing is making somebody else wealthy, right? Individual B, who bought that $275,000 house in our example 30 years ago, we go forward 4% per year. That house is now worth basically $892,000. And guess what their mortgage is now? Zero. They paid it off in 30 years. So they have now accumulated just on their own without putting monies into, side accounts, investment accounts, crypto, whatever your thing is, just in their house alone. That's going to be your greatest asset. In the house alone, they've generated almost $900,000 worth of family wealth, whereas the renter, of course, zero. You've got to jump on the house ownership train. I'm telling you. And with my help, you can. I've got some videos showing you what to do, what to avoid, how to lower your cash to close, all the things you need to do to get in. If your credit scores are low, I can help you with that. Let me, the Mortgage Patriot, build a game plan to get on, and we'll get you set up and ready to own a house within 3 to 6 months. Okay? I'm hoping this video helps you and or your friends if you pass it along. I'm Kevin Fagan, the Mortgage Patriot. Make it a great one.